Hey, Jack. Jeffrey said he was in the opening playbook today, so you might be solo today.
Oh, wow. Okay. Well, there you have it, folks. Going to be solo today. So let me show you what's on my Pete L. Good to see you back. Disastrous cruise. What happened, Pete L? Hey, Dennis, Will. So here's what's on my list. I got the SPY, Dow, and QQQ, those three major market indices. If they're above all three trend points, the market's bullish, which it is now. Then I got most of the stuff I got a little position in. Apple, AbbVie, AEP, it's my utility holding. Aflac, that's my grandson's stock. ANET has been amazing. Let's take a look at ANET. I'm long this one just to let everyone know. It's had a little pullback right here. I'm still long it. I've been buying more. Got a little over its skis at 160, but looks good. Yeah, bounced down, hit that intermediate term trend point, closed below the short term. So we'll see how this one's going. It's back up about $6 today. Still building a position in circle. This little sideways action sometimes is good. It's just changing hands and going sideways. There's going to be some compression in here to pop it higher or bump it down lower, but I'm believing it's going higher. I think that one is going to be really good to trade too, not just for a one-time trade, but going forward, I think that one's going to be really good. CRCL. And Figma, I've been starting to play with this one as we talked about. This is a recent IPO, small valuation. As most IPOs did, there was too much euphoria. Here's the top 144.10. And I'm in here around 50 something and 55. Now, I would never average down on any stock, but I would average up as it's going higher. So I might add to this in a little while. BlackRock hit a new all-time high. Google coming back. I've got a 250 call that expires this Friday. Hood, one of my favorites. IBIT, very soft, $63. I got a 63 naked put hanging out there. Joby, I've started to trade this one. And I sold some calls against it yesterday. JOBY. Oh, wow. Yeah, that sounds bad, Pete L. Trying to go to the Caribbean and ended up in Boston. Yeah, I like this Joby. I looked at this when I used to trade Archer. They're both not bad, but Joby's been a little bit better. Take a look at Archer. Not too bad either. It hit about an all-time 52-week high. That would not be the all-time high, but that'd be a new 52-week. The all-time high is 1861. Nvidia really soft today. In the pre-market, it was up about $4.5. Just kind of going sideways. 195 was the high. Down here now to 181.95. I'm still long. Now, we'll look at Tesla. It's got a strong buy according to bar chart Premier based on its technicals. You see the all-time, well, the 52-week high here is 488. Days high, 440, getting closer. So many options are bought on this, looking for a huge breakout to the upside, as we talked about. Over 500, maybe 550. What I like about it right here is you see it's bouncing right along that short-term trend point. It's finding support there. It's closing above there, all except for 1 day, and that's a real good sign. It's got that 474 that looked like it was going to be a breakout. This next move up, I think, is going to take it over 490. I'm long. I'm not long this one. Sorry. Do not own Tesla. I do trade the options on it, though. I love to do a debit spread on this one at the right time. We might get the signal tomorrow. And just to show you how that would look, is we would take the following Friday. That'd be the 24th. That'd be a weekly option on Tesla. And this is a debit spread we would use on the calls. So the stock is trading at 434.85. 434.85. So we would buy the 435 call and sell the 437.50. And again, the reason we would do that is if we just bought that 435 call, it cost us $2,000. And if we sell the 437.50 after buying the 435, we're going to lower it to $1.20, $120 to get into the contract versus $2,000. It gets you into this trade, 120 bucks. So if we were filled at 120 on a debit spread, we'd take 50% of that and add it to the 120 debit price and put it for sale good till cancel with a limit on that profit. And all we would need if we get the signal on Thursday is about a 1 to 2% move in Tesla to pick up that 50% gain. The power of options, when done correctly, nothing compares. Hood, still in Hood. I'm buying more Hood. AVGO, I've been buying more AVGO. Little lofty. You know, we talked about these gaps in a trend that have to be filled in some point going forward. So that would mean this would have to come down to about 308, 308.80 from where it is. I don't know. It's been pretty strong. Every time it drops down near this short-term trend point, it finds a lot of support, and it looks like it's going to be making a new high, but this gap here is going to have to be filled in. When is impossible to tell. Vert is another one. Well, I got the short on I got the naked put going on TSLL. I sold the 20 strike price put naked for $2. So it's at 1963. If I do get it assigned to me at 20, my cost is 18. I'll probably sell it. Although I'm expecting a move in Tesla, but this just it's going sideways. Now, something I never do is short stocks in a bull market. I always like to use a market driven approach, and that is just very simple that when all three indices are above all three trend points, then you're long and only long. And if the indices are trapped between the trend points, you can go long or short. And if it's below all three trend points, your best bet is short. That's just a market driven approach. That's always worked for me. I read a study where just doing that, something that simple, can improve your odds of success on every trade by a pretty substantial amount. But what I did was I shorted this stock yesterday. It's at 52.79, 78. I shorted the stock at 57.04. So I got about a 6% or so gain in it. And what do you think I should do? Should I short more or cover my short? Type it in the chat. What do you think I should do? 6% overnight. Should I reel it in and cover that short, or should I let it ride? I'll tell you what I'm going to do. I just want to see what you think I should do. Yeah, type it in. Everybody typing it in. Okay. Oh, all right. All right. On the Michael Petrano, I traded the stock. I just shorted the stock. I'll do some more covered calls on Hood and ANET. I love that. Kathy. Greg says short more. Pete says cover. Dennis says cover. Lynn says cover. Greg says you called the top perfectly. Don says add to it. AJ says reel it in. Kathy says let it ride. Andrew says let it ride. Let it ride. Jim, John, Beth, ride. Jay, ride. Let it ride's the winner. Dennis says 6% overnight good. Now I could cover part of it, but I'll tell you what I'm going to do. Wow. Pete L bought stock at 20. It went to 100. I would sell part of it or all of it. It's hard to tell if people are taking profits in the rare earth stuff because the news around that changes every day. We'll talk about that in a minute. Yeah. Let it ride. I am going to let it ride. In fact, I may short more of it. Now, one thing I never do when I do short, and I haven't shorted a stock in a long time, um, years since 2022. I won't, if it goes higher on me, and I was underwater. It was 57.80 something today, and I'm short at 57.04. It hit 57.95, so close to a buck, almost a buck underwater. And if it went higher, I would not short more. I would not average up, just as I don't average down. Stocks going down, I don't throw any more money. I don't throw any good money after bad money. If I'm in a bad trade and it's going against me, I'm never going to average down, average in price. And same thing, I would never finance my short by shorting more at a higher price to raise my average cost. A lot of people do that. That's one of the most deadly trades in the world. When you're short and it's going against you and you're selling more short to raise your average cost, that's a bad deal. But this thing, I rarely get into the fundamentals. I just like charts. And when I look at this one, and I wouldn't recommend anybody do this either. It's just, I got a high risk, an appetite for risk, so I can do this and sleep well at night. But yeah, somebody said I hit it right at the top. I think the top yesterday was 58.39, and I'm out at here it goes 53. Now, let's see, 52.81. Yeah, it's struggling around, but this one really looks like it's going to take a drop to me. Now, when you look back at this kind of looked the same, right? And it did come down, but it only came down like $4 before it started to run again, and it ripped. So, this one comes down another $4 or $5, it could rip again. But we'll see how it hangs out. I'm going to probably add a little more to it, but right now I'm going to let it ride. I want it to get down. Uh, yeah, Jeffrey thought it had more to run. You should have bet him a dinner. Yeah. Yeah, Dennis says it's lofty and it could touch that short-term trend point. That's what I'm thinking, Dennis. It's exactly what I'm thinking. I'm looking for a pullback right into this 37 range, but it's going to get my attention at 44 for covering. I like to see a little more weakness and I'd pile on. Yeah, I should have bet Jeffrey dinner, huh? I don't want to bet against that guy. He's right so much more than he's wrong. But I don't know. I just have a different way of looking at things sometimes. And I see this thing as running on fumes. If we go back and look at it, I think quantum computing has a long way to go. And I think IBM would be the first one to do it, maybe even Alphabet. But the fundamentals here are so terrible. It's got a little market cap, 324,000 shares outstanding. They're losing money. Really, really bad. Rough burn rate here. Negative earnings per share. They report 11/11. That's coming up here in almost less than a month. But I just don't think this thing is going to pan out, as they say. And just going short was the best. We looked at the options. Buying the puts cost too much. They were already priced in. Let's take a look at that. Yeah, that's right. Let's take a look at this. Is this a business development company? It's got a hard sell on it. Uh, yeah, I don't like this. This I don't like. Too much downside. It's got a strong sell based on the bar chart. Real estate mortgages. Yeah, wow, that'd be a rough one. So, you'd have to take out a mortgage at a pretty high rate. I don't know how they could substantiate a 9.17 dividend, dollar dividend. Yeah. Pro. Yeah, no, I don't like it. I think some of these goes from 11 to 10 and it pays 9%. You're already down a percent if it just moves $1. So I don't like this one. There's better deals out there for yield. Not going to be as high as this, but yeah, talking about yield, I just started buying some Verizon. Yep, sideways to down, paying 6.72%, and I think it's putting in a bottom right here. Now, Back to Rigetti. If I get a little more move down, I'm going to drop a stop loss on it and let it trail it down. Greg asked about a meaningful pullback this month. It looks like it. I'll show you here in a second here, but just again, this to tell you this angle is not sustainable in any chart, any trend. It can't hold up like that. There's got to be a pullback. But speaking of pullbacks, actually, I'm going to show you something better than that. I'll switch my screen here 1 second. Yeah, play along with me on the Rigetti. I'll keep you guys updated on that and let you know how it's going. Let me find this trend point. All right, hold on 1 second. Yep, Greg wants to get some stocks on sale. I do too. All right, can everybody see Trend Point VIP? Trend Point Software, am I sharing that correctly? Yes, all right, Pete. So this is how I use that market-driven strategy. First thing I do is I look at SPY, QQQ, and DIA. AJ, you can't see it? It should be a black screen with a very colorful chart. It's good. All right. So this is the yeah, you can make me smaller. Hit the I can't get too much smaller. I've lost a little weight, but I can't make myself much smaller. But you could probably click that window and make me smaller and then change the screen to just show the whole screen that I'm sharing, Mike. So here's the deal is that SPY is getting trapped here. A little more drop and it's going to be stuck with the short-term trend point hanging over its head. So we've had a little tiny drop there, back there, a while back, and then we had a tiny drop here. This is the biggest one we've had it in about 6 months, maybe 5 months. The last big bar was here, May 1st. Here we were climbing out of it. That's that first pullback right there. So we got it again here. And what was interesting was it fell all the way through the short-term trend point, hit the intermediate-term trend point, kind of bounced off of that. Then it opened and closed right at the short term. Next day, closed below. Yesterday, closed above. But it's, as you can see, it's nowhere near where it needs to be in terms of strength. And then the other thing I look at is QQQ, tech heavy, what I like. Same thing. It's had 2 days here, backed off pretty good. Now, this index is always going to be more volatile than the DIA or SPY, just being tech. But yeah, a little bit weaker. And then I like to look at DIA. So they're all still bullish, but barely. Yeah, DIA has been probably the weakest, going sideways and now putting in a little dip. The other thing Now, when I do that, when I look at these three, that's going to tell me the condition of the market or the state of the market. But the other thing I like to do is look at the number of uptrend stocks versus downtrend stocks in trend point. Now, they've all hit a new 52-week high. They all trade on a major exchange. They all have 500,000 shares or more. And you can usually find some really great stocks here. But looking at the state of the market, that's where you're looking at the three indices relative to their trend points. But when you're looking at the strength of the market, I look at the number of uptrends, new highs versus new lows of stocks that qualify based on how I look at them, based on what I think they need in terms of price, volume, action, that kind of thing. So we got 40, 50 stocks. That's down. It was 79 the other day. But just compared to the downtrend, you see there's not very many. There are not many on the downtrend side. $18 on the downside, 50 on the upside. Let's look at how bad some of these are. Now, why I like to use this, but again, I would only look at the downside stocks when the broad markets were down. But look at how this gives you such an advantage if you're playing stuff on the downside, if you're buying puts or you're shorting the stock, or you're doing a bear call spread. This is just exactly what you want, a stock that's continuing to make a new low. I think that's GoDaddy. Yeah, there too. There too. So Hormel, let's take one look at Hormel. Wow, really bad. That gap's got to be filled in too sometime, but it ain't happening anytime soon. Let me take a look at this one. Wow, that looks terrible. Today's movers, let's take a look at what's happening. See if we can find a good one. That looks great. AEM, that looks awesome. That looks great too. Not so good. I like to see a smoother trend. That's not bad. See how that filled in that gap? Got to happen. A lot of times, like I say, good news, and that's probably what this was, could make a stock go up, but it can't make it stay up. Cat's looking good. CVS, who would have thunk it? That looks pretty good. That looks really good. Look at that. Little lofty, but that's a heck of a run. Gold. A little too steep. That one had been doing great, but it's gotten away. And it's also a little too cheap. Should be cut out of there. McCormick. That looks pretty good. One of the things I like to look for is a crossover to the upside at any point in the last 6 months. If you see that, if you don't see that, it's good too. But if you do see it, it's a strong indicator that this is going to go higher. So it had the first crossover back here where the trend points are inverted. They're completely upside down. But when that short-term trend point crossed over that intermediate term down here at 599, that's game on. That's a strong signal for me. Then the second thing that happened is we had a crossover right here at 691. Big run. And that short-term trend point is busting above the long-term what an indication that is of a big run, right? And then the intermediate term followed up and crossed over the long term right here. And then all three trend points are now in perfect alignment, and this thing just takes off. Now, when I trade them, I don't even look at the fundamentals on them. I just strictly go by how I have this set up. This is a blue bar day is a higher daily high and a higher daily low. A yellow bar day is a higher daily high or a higher daily low, but not both. A white bar day is neither. And a pink or purple bar from the old software is a lower daily low and a lower daily high. So that's what the crossover is. We had inverted trend points, then they corrected themselves within the context of a trend. That's a beautiful, beautiful trend right there. Really good. Little too steep here again. That's like the Rigetti, right? That's not sustainable. That is not a sustainable. If you get an abnormal move up and you're long a stock like this, that's your sell signal. That looks pretty good too, an LR, but a lot pretty lofty. Little lofty. That looks really good. PAAS. Yeah, not too much loft. Had a nice little crossover back here. Once that happens, it's game on. I don't think that's ever failed. Little lofty here. That's the thing is the market isn't as lofty, but a lot of these stocks that are at all-time highs or 52-week highs, they are really lofty. It's tough to find one that's just trending right along with that short-term trend point and where that is at a 45-degree angle, not anything too steep. This is silver. Silver and the miners and the ETFs, they've been doing good. But I'm not trading any of them. That looks pretty good. I don't trade gold or silver. That's way too steep. See, again, this is going to crack. That one looks good. TFPM. Uranium, I'm guessing URA. This is uranium too. Nice crossover there. Bang. There's one here. Crossover, crossover, crossover. Game on. They went from inverted to correct. The trend points did, and it's going to go higher from there. Now, here's a good example of one that shouldn't be in here. We're going to have to clean this out. And the reason it should not be in here is it has to have a bigger daily bar, the difference between the open, the high, the low, and the close. It has to be a bigger bar where this thing could give you a $2 to $10 profit in 2 to 10 days or using options. Good old Walmart. Way too lofty here. Doesn't mean I would short them when I see them too lofty because it could still go higher, but statistically, that is not going to hold up. That's a beautiful looking trend there. Look at that. Wow. Again, too much loft right there. But as it was just climbing up with that short-term trend point, that was awesome. XME, Zscaler, and Zyme. SPY again, you want to see? This is the one that tells the most because there's 500 stocks in here compared to 100 or 30 in the Dow. And this just looks like it needs a break. And that wouldn't be a bad thing. It's got to come down a little bit to go higher. But it's been in a real tight range above that short-term trend point almost every day, except as one day it bounced off, one day it went under, 2 under, 3 under, and then we've got 3 under right here in the last 4 days. That's why I say that it just looks soft to me. And those are the biggest drops we've had in quite a while. Since the crossover, nothing's come close to that intermediate term trend point, and that's happening right now. I'm not too worried about a huge pullback. If I have a stock that I am worried about, like NVIDIA or something, I'm going to buy a married put. That would be buying puts that are at the money to where the stock is now. And if the stock falls, then the value of that put is going to soar. I'd make even more in that case, but that's just buying insurance. So that's the SPY, AJ, and it's still bullish because it's above all three trend points, but it's weaker than it's been. All right, BWXT. That looks great. So, Jim, does this have any earnings? Let me see here. Wow, that really looks good. Little tiny bit of a loft there on the end, but really good. Let me see one thing. Wow. And they even have earnings. All right. I'm going to have to write this one down. They're profitable. 368 earnings per share. Little tiny valuation. Be a great buyout. Oh, even pays a dividend of almost a 0.5%. Yeah, that's good stuff. I like that one. Ruth says, why not trade gold and silver? I just don't like it. I've never liked trading gold or silver. I always thought there was something better out there. I really like tech. Some guys they'll trade anything. I kind of keep my focus in what I think is going to give me the best bang for the buck. And silver could just be a long-term, nice, long-term, safe trend, but I'm not in it for that. I got other stuff that can do that. But I'm not saying you shouldn't trade gold or silver. It's made a lot of people a fortune. There's some guys trading this thing that haven't had a loss in any of these. Jeff Smith has been amazing at this with gold, predicting gold and calling gold trades. Wow, Mara looks crazy. One thing, this stock, look at the intraday bar, how much this thing can move in one day. That's the price elasticity, right? So 22 to 18 and a quarter. That's a good daily move. Look at that one. Opens at 20, the low 19. Yeah, that's got a lot of good action in it. It's bullish. It had a crossover, but this volatility is so extreme that it could just go in either way at any time. We barely had a crossover. We had a crossover back here. It was game on from there, but it didn't move much. It didn't continue. It broke back down. That's the problem with it. Too volatile. Here's another one I just started buying. VRT. I'm going to add to this one as it goes forward. Oh wow. All right. So Steve's been selling naked puts at 18 on Mara. And he expects 26 next week. Pete got a Mara call, a 20 call that expires on the 17th of October. It's this Friday. I got 2 days. I got a ton of stuff expiring. Maybe my most ever on one day. VRT is long a put and probably for insurance, I'm guessing. You're long the put and then weekly short puts naked. That's been good. Yeah, VRT has been pretty impressive. Let me see something on here. Yeah, VRT has been doing really well. 184 is the 52-week high. Pays a little tiny dividend, if that matters, not much, 0.6%. 6 month, the beta is 1.84. That's going to make it really good for options. Yeah, naked put. Let's see about that one. Wreck-It Ralph. Let's see what we got here on the vert. Options on vert look pretty good. The 17th. Let's change this to the 31st. And we'll go down to the puts. And we are at 177. Wow, these are huge. It is $7.40, maybe 8. Kind of a wide spread here. Little open interest. But this is a fat premium either way. If you got the stock put to you at 170, you could subtract $7.40 from that, and that would be your cost basis. Yeah, these are great for selling naked puts. I might have to dip my toe in this one. I still have the naked put on TSLL at 20 and 63 on the IBIT. But man, oh man, that looks fat. Let's see, going out a little more time. So, if you did it today, you could cash flow the month of October. And then if you did it again for 11/21, you could cash flow the month of November as well. And that 170 put is $11.90. The midpoint is 12.35. That is just crazy. Yeah, that is just crazy. Crazy high, right? Same thing with the calls. If you were buying these, look at that. It's way too expensive. Debit spread might be good, but this one isn't primed yet just for debit spread. I got a couple of really good credit spreads going that expire tomorrow. So let's take a look at this, where I'm at. So I sold the 177.50 and bought the 175. And it's at 180. Was really strong earlier. Last couple days got up to hit that new high at 195, but what a pullback since then. Really strong. It's dropped below and closed below twice. It's closed below the short-term trend point. So this is getting close. Some people sold the 175 and bought the 172.50. That's going to be a little bit better bet. 8% is easy to squeeze out of that one in 3 days. So that'd be 20 cents on a $2.50 difference in strikes. Yeah, let's take a look at, and that's what I like about this one is, and a lot of these is, it doesn't matter the price of the stock. It just matters how much the difference in strike prices is. So if it's $2.50 difference in strikes, it's $250 to do that trade. Broadcom's been another one. No, this is my process is just to find a stock in a good trend like this and one that's been going in a trend. And that way, when you're doing these credit spreads, you can go back to the well, so to speak. You can just trade the same stock every week until the trend is broken. And that makes it super easy. And there's always a lot of great ones out there. So on something like this, it meets all the criteria and it's trending nice. So what I'm going to try to do is try to find a credit spread in here where I could sell one put and buy a lower strike price put on a $2.50 difference in strikes and pull out at least 8% or more. 5 sometimes, yeah. Yeah, Wreck-It Ralph is short in the weekly puts. 172.50. Yeah. So that's how I do it. I would go back then. Once I've got that, I'd look at the options prices. And I'd go down to puts. Now, it wouldn't work today because for Friday's expiration, the 17th, we wouldn't find a big enough spread unless we went too close to the price of the stock. So at 354, I'd want to be down by where we saw those trend points and create a spread by selling one and buying the next lower one. Now, this used to take me forever to do it uh, the long way. And now I got something that does it for me automatically every day. So it's opened up the opportunities just tremendously.